So I'm going to bring on Tony Dimitriadis, who is a an accounting and advisory. He runs an accounting and advisory firm, and he specialises in helping ambitious business owners build a financially rewarding, tax-efficient lifestyle business. Tony is a certified practicing accountant and has successfully run his firm, AD Partners, for over 20 years. And he is the author of Build It and The Money Will Come, released in April 2017. Business owners have been educated and have gained experience in providing the products or services they do. Unfortunately, what they haven't been given are the resources and training to financially manage their business. So ultimately, the people that Tony ends up working with, he helps them to create a plan for their future, and has a structure that's appropriate and helps them to become financially savvy, to meet all their commitments with the right systems and achieve the financial rewards to take control over their business and their life. Tony, you're going to be giving us your 5 secrets to a financially rewarding, tax-efficient lifestyle business. And I'm looking forward to your presentation. So please take it away.
Thanks very much, Rose, and I really do appreciate the opportunity to chat with all of the viewers today and the attendees. So thank you very much for your time. I do appreciate it, and I know it's very precious, busy in your own respective businesses. So today I wanted to talk about how to build a financially rewarding, tax-efficient lifestyle business. The slide there is headed "Future-proof your business." And as Rose has said, these are the 5 key principles that we work on and help all of our business owners to to end up getting the maximum benefit and return from their business. So this is really about helping ambitious business owners who want to achieve their personal goals, whatever they might be for you. Ultimately, you want financial stability and control over both your business and your life. And sometimes, particularly in recent years, that probably hasn't been the case for some. You want a lifestyle that enables you to have more money in your pocket, more time to use it any way you want. That's the ultimate from a business owner's perspective as we see it. The number one reason, however, why businesses fail is got nothing to do with your ability to provide the service and or products that you do. It's all about not financially managing your business well enough to survive or thrive. So cash flow and financial management is the biggest reason why businesses fail. So as a result of that, the reality is that you need a high level of financial intelligence in your business to be successful these days. And if you don't have it, you need to make sure that you have someone supporting you that does. So either you need to get it or you need to get someone alongside you that does. So we say that you can achieve this by really ticking off these 5 key principles. The first is strategy, which is about deciding what you want to do and where you want to go with your business. The framework about getting the strategic plan together, assessing where you are now, deciding where you want to go, and then charting the most efficient course between the two. The second, structure, making sure you've got the right structure that can save you time, money, and a lot of heartache and stress. The wrong structure can really become quite expensive, can be complicated, or simply just cost you too much money. The third area there is statutory, and that's really understanding what your compliance responsibilities are. The reality is, in your own businesses, you'll have many compliance responsibilities. The financial ones from the ATO, from ASIC, from the State Revenue Office, Titles Office, Work Cover Authority, superannuation provider, banks, is endless. So being on top of those is critical. The fourth is systems, and systems are about trying to manage everything is critical, and having the systems in place so it can be as efficient as humanly possible, and to have your money managed well, to be on top of things is critical, because you're not going to be able to achieve your goals without that. And finally, support. As an ambitious business owner, you're probably trying to do everything yourself. The reality is you can't, and at the very least you shouldn't. So being all things to all people requires a standard that I don't think any of us have, to be truthful. So just that's a recap of the summary of the really key 5 areas that I want to talk about today to really get on top of your financial management and really generate the money and the benefit out of your business. So just deep diving then into each one. With regards to strategy, there's a famous quote by Benjamin Franklin: "If you fail to plan, you're planning to fail." So really, this is a matter of understanding, where you're going. What do you want to do in your business? What do you want to be known for? Defining a mission. A business mission is about defining your goals, your ethics, your culture, your behavior, and it really defines not only what your business does, but what you do as the owner of that business, for your customers, for your employees, and for the community. With regards to your vision for your business, it's more a clear and concise long-term goal. What do you want to do? There's a great book written by Jim Collins, Built to Last. I recommend it to anyone out there that's a reader, and it's really about the vision being big, hairy, audacious goals. What do you really want to be known for? And then defining your values. What are your principles? What dictates your behavior and your actions, both from a personal and professional point of view, and really making sure that they're aligned with your business. Because that's when you're really going to generate the maximum benefit, not only for yourself, but for your clients out there. So having established that, you then really want to break it down into smaller, more immediate chunks, and start to get a business plan together and start setting 1 to 3 year goals. So we can talk about the big stuff, the umbrella, and then we really need to pull it back and to really narrow down your focus to those shorter term thinking and goals that you need to meet in the next 1 to 3 years. And there's, I'm not sure whether any of you have heard out there, but there's what's known as a SMART goal setting system, and that's one way to really set effective goals. So SMART is the acronym for specific, measurable, assignable, realistic, and time bound. So it really means being very specific about your goals and your targets. Not so much wishy-washy, but saying, I want to, increase my revenue by X%. I want to increase my workforce by, 4 people. I want to, add another business premise, another location. I want to branch out interstate. Whatever it might be very specific about it. How are you going to measure that? Be very mindful that just saying that is one thing, but putting in place systems to actually measure that and how you're tracking towards it. Assignable, who's going to be responsible for that? Is it you? Are you going to delegate it to one of your staff members? Obviously, being realistic is important as well. We do want to push ourselves with our goals, but, we need to be realistic, making sure that they are actually attainable. And time bound, put actual time frames on each of these goals. when we talk about, do I want to, increase my revenue by 10%? Is that this year? Is that in the next 6 months? Put time frames on each of those goals, and that way you can see how you're measuring against them and what you might need to do if you're not achieving it, or if you've overachieved, maybe you haven't stretched yourself enough. So that whole planning piece is really important, and really understanding what you want to achieve in business. Obviously, having done that, you then need to understand exactly where you are now. Now, you might be saying, well, of course I know where I am now, but really deep diving into your current financial position to get a very clear picture of how you're going. So obviously reviewing all of your financial statements and really deep diving into the numbers to understand, what your revenues are, what all your costs are. And that can be said not only from a business point of view, but from a personal point of view. Because sometimes as business owners, the two can overlap. And we want to try and separate them as much as possible and really be analytical and critical about, where we are and what we're doing from a numbers point of view. One effective exercise when doing this is what's called a SWOT analysis. And that's really about understanding, firstly, it stands for strengths, weaknesses, opportunities, and threats. So the exercise requires you to reflect on your business's internal strengths or weaknesses, and also the external opportunities and threats that might be out there. So, what do you do well? What is your strength? Taking advantage of that strength in the marketplace. What are the weaknesses internally in the business? Is it people related? Is it system related? Is it the offering that might not be as complete? And really working on those. The opportunities and threats are sort of the external factors. So what opportunities are out there? What void might there be in the marketplace that you and your product or service can potentially niche and benefit from? What are the external threats? And there's probably a lot of those. Some we can't do much about, but understanding what they are. They might be competitor related. They might be, the market conditions at the time. So really deep diving into, all of those aspects really gives you a clear understanding of where you are now, but also the areas that you can improve on and really benefit yourself and have a stronger business as a result. So once you've done that analysis, you'll have brought to the front of your mind some really important issues, some good and maybe some not so good. But the truth is they're all good because you've brought them front of mind, and they're issues then you can do something about. So having assessed then where you want to go, where you are now, it's then how you're going to get there. How do we get from where we are now to where we want to be? And that's, really looking at things like, the use of business benchmarks, KPIs, obviously taking action and measuring your performance. Business benchmarks are really just a gauge. They're not about you trying to be the same as your competition. They're about understanding what the market and the competitors within your market are doing, and see where you sit in amongst that, and see how you can improve and better that. Another benchmark is the return on investment. You put a lot into your business, time, effort, money. You need to make sure that you're generating the appropriate return from all of your efforts. Key performance indicators, KPIs, are internal measures that you can improve in your business. And I like to think of them as levers that you can pull and push, in the direction that you want to make sure that you're generating, the goals that you're setting yourself, whether that's, increased turnover, whether that's lower expenses, a mix of both in terms of more profit. Do I want to achieve a higher margin for the product or service I'm delivering? So all of these things you need to really dive into, and you need to create these things as a measure and tool to help you improve along that journey, so you can get to from where you are now to where you want to be. So once you've done all of that, you need to keep in mind that this is not a set and forget process. You really need to be making sure that you are measuring your progress along the way, that you're tweaking your goals along the way, whether you're over or underachieving them. But you need to be really taking action and doing the things that you need to do to get things done. So that's really the strategy piece. The structure piece is, there's another quote I like to throw out from Anna Kendrick. She says, "I thrive in structure and I drown in chaos." And that's, true across all aspects, but particularly business. And the foundation is the most important part of any structure. And that holds true for business as well. The benefits of having the right structure is that it can save you time, it can save you money with regards to tax, it can provide flexibility when it comes to distributing profits or adding, removing business partners. It enables you to grow without any adverse effects, gives you the peace of mind knowing that you're set up potentially not only for today, but for well into the future. If you don't have the right structure, on the other hand, it could cost you dearly in terms of money and then ultimately, your business, because all the hard work is not generating the return that you're looking for. So how do you work out what the right structure is for you? Well, you need to understand, obviously, what structures there are and what your options are, but then what are the things you should think about when assessing which one is right for you. So the four main structures from a trading business perspective are to operate either as a sole trader, as a partnership, as a company, or as a trust. And each of those four have their advantages and disadvantages, and understanding which one is going to be best suited to you really is about understanding those things that you need to think about that's important to you when choosing the right structure. Those things are asset protection, tax minimisation, the cost, the ease of administration, and succession planning. So these are all the things that you should be thinking about, because they're going to impact which structure is going to be best suited to you and your business and your particular circumstances. And once you've done that, generally the structure chooses itself. The third area is statutory. So this is the compliance side of business. And there's another great saying, a great quote from Joshua Charles Stamp. And he says, "It's easy to dodge our responsibilities, but we cannot dodge the consequences of dodging our responsibilities." Might sound clever, but it's incredibly true. So you need to make sure that all of your statutory compliance is met on time and with complete accuracy. Because if you don't, you're potentially going to be hit with penalties, interests, and extra costs to fix those problems. So it really is a critical area. So the types of statutory compliance that we're talking about, firstly, tax. Tax can be a dirty word to many, but within tax, there's various types. There's income tax that you'll pay on an annual basis. There's GST that you'll pay either monthly or quarterly. There's pay-as-you-go withholding, that the amounts you withhold from all of your employees. There's pay-as-you-go installments that you'll pay from a business point of view, which might be the old terminology is provisional tax, so the tax you're paying for the upcoming financial year. And then there's the ATO themselves, and really understanding how best to deal with them to make sure that you're meeting your requirements, or if you're not quite up to date, how to best manage that. because the ATO is one organisation you don't want to get on the wrong side of. Other than tax, there's superannuation. So as we know, the current superannuation guaranteed charge responsibility is at 10.5% of the gross wage of all of your employees. So that needs to be met. Understanding that clearly you need to do that for your employees, but you may also need to do that for some of your contractors, and understanding which contractors would fall under that requirement. Those that are essentially one-man bands, the sole trader types that are predominantly working for you, they would likely fall under that category. If you're contracting other larger businesses, then obviously that's not likely the case because they'd be managing their own. So really understanding those sorts of things is very important from a superannuation point of view, because these things now are controlled by the ATO as well. The superannuation guarantee charge is managed by them. And if you're not paying your superannuation each quarter, then you have to actually prepare what's known as superannuation guarantee charge statements and lodge them with the ATO. And then all of a sudden, you're under the spotlight with the ATO for your superannuation on top of all of your tax. Workers' compensation is another compliance requirement, covering obviously injury for all of your labour employees, and again, contractors, those that would fall under that employee-employer type relationship. Other statutory compliance items are payroll tax, land tax, stamp duty, etc. So if you're starting to deal in property, a few of those come into play. So you can see that there's a number, many, in fact, statutory compliance obligations placed upon you and your business. And being aware of them is one thing, but being set up to manage them well is another. I like to say knowledge is power, but management is success. And really, managing these things and being on top of them is going to be critical. The fourth area is systems. And there's another little saying by Charles Atlas: step by step and the thing is done. And really, systems are about putting in place steps and processes in order to undertake tasks that are done within your business. So whether they're back of house or front of house type tasks and responsibilities, having systems in place to manage them, to make them as efficient as possible, is critical, because you want to maximize the amount of return for the effort you and your team are putting in. So having systems in place is critical. Now, at a high level, you need to be looking at managing your cash flow, managing your financing, and troubleshooting any problems you might have. So cash flow is a big one, because as I said at the beginning of the presentation, cash flow and financial management is the number one reason why businesses fail. So really understanding your cash flow position, understanding the difference between cash and profit, money in, money out, the ATO, rears its ugly head again, overcommitting to expenditure, and preparing cash flow forecasts. So in this area, a lot of business owners tend to focus on profits rather than cash flow. So they might, check their financial statement and say, oh yeah, I'm generating a profit, things are going well. But this is where problems can begin if we're not focusing on the cash aspect. So, put simply, your cash flow is money you receive from your customers and your clients, and money you pay out to workers, suppliers, the ATO and others. And there are three big killers to your cash flow. The first one is slow paying customers, which is obviously something we don't want. So where you're offering your services on credit, then, slow paying customers can really put a strain on your cash flow position. The second is your commitment to the ATO, and really be on top of all of your tax, GST, super, etc., all your statutory compliance obligations. And the third is overcommitting expenditure. The way you manage your stock of materials or your equipment that you acquire in your business. People can overspend and have a little too much on things that they don't need. Generally speaking, a lot of those things on a day-to-day basis are readily available. We understand that in the immediate current climate, there's been some issues for businesses that do rely on stock and materials that come from overseas. But outside of that, generally speaking, you should be able to manage that reasonably well. As I said a moment ago, it's actually possible to be making a profit and yet still be experiencing cash flow problems. And that is simply a matter of timing, of collection of money that you're getting in from your clients and money that you're committed to paying, staff, suppliers, and others. So simply by making more money doesn't necessarily solve your cash flow management issues. It's important to put those strategies in place to be able to be collecting the money sooner, paying the money out, when you need to, and having enough in there to manage that. And that really then leads into the issue of working capital, because working capital is just that. It's the payment to suppliers, the work in progress that you might have, that you might be undertaking in your business, and then the receipt of customers. So, you're outlaying money, you're doing work, and then you're getting paid. So the more you can get paid up front before you start certain services or provide certain products, then clearly the better off your working capital position is going to be, and overall your cash flow position is going to be. So really managing your payments to creditors, you're managing your work in progress and your collection from your debtors is going to be critical. And this is where, we tend to be so caught up in the day-to-day delivering of the service that we do that we don't really pay as much attention as we need to from a cash perspective, making sure that cash flow is flowing in, as much, if not more, than it is obviously flowing out. The third aspect in this systems area is finance. And finance, can be a real benefit for your business. So generally, you can finance your business operations and investments from 4 key areas: from debt, being a loan from a bank or another third party, equity, a build-up of your own funds, introducing an equity partner, potentially taking on an investor, or your internal profits that you're generating out of the business. Now, each of those, has its own sets of risks and advantages, and working out the best option for you will be determined by, your ability to access debt, what equity you might have, the profits that the business is generating, and whether or not you do or don't want to actually be introducing an investor or a equity partner. But, really understanding, all of those options, particularly if you need a significant injection of funds, is going to be critical. And, making sure that your business is set up to, get the best possible finance option to manage that is going to be very important. Troubleshooting, things like preparing financial statements on a regular basis. Too many business owners are probably not reviewing their financials on a monthly or even more regular basis. They might be doing it quarterly at best, or 6 monthly, or God forbid, sometimes annually. You need to be looking at your financials on a regular basis. You need to be comparing your actuals to your budgets. We talked about, preparing budgets and those plans. You need to be, seeing how you're tracking in comparison to those. You need to be reviewing your terms with your suppliers. You need to be reviewing your terms with your debtors. You need to be on top of reconciling accounts. And there's no reason in today's day and age, with technology the way it is, that you can't have your financial reports up to date 24/7 at the touch of a button. So doing all those things will really help you manage your cash flow, your working capital, and ultimately the financial management of your business. The final area is support. So support is critical. As I said earlier, as a business owner, sometimes we fall into the trap of, trying to do everything ourselves, and sometimes as a business owner, we'll feel like we're on our own. We'll feel like we're managing the entire business and there's no one around us to help. Now, that's silly. There are people around to help, and it's a matter of choosing the right people in your team to be able to help you in your business. Your industry places many demands on you outside of the financial demands. So making sure that you're covering those bases is really important. As I said, we fall into the trap sometimes of trying to do everything ourselves. We can't. So you need to put the right support team in place. So from a financial management point of view, what do you need? Well, you need your own chief financial officer or CFO. Now, the reality is many businesses, particularly small to medium-sized businesses, can't afford a full-time CFO. So what do? Well, they can potentially look to get a virtual CFO. So a virtual CFO is essentially someone who performs the same role, but on a part-time basis at the fraction of the cost. So you can still get access to that personal financial advisor, someone who becomes your trusted source of financial information and perspective, someone that you can trust to help support you, works closely with you in your business, to help you make the right business decisions to improve the financial management of your business and ultimately the financial performance of it. There's someone there that can be the sounding board to provide some financial advice. And in these challenging, shall we say, economic times, a virtual CFO will provide you with that valuable insight and help you navigate your way through, because it's tough, and it's even tougher if you're trying to do it all on your own. So you can use a financial, a virtual CFO to take advantage of that level of expertise that was previously not available to you. And that can really do wonders for your business. And so outsourcing this part of your business makes perfect sense. I like to say, if you want to go get fit, you might engage a personal trainer. Well, if you want a financially healthy business, get yourself a virtual CFO. Doing so is going to resolve a lot of your financial management issues. And you'll no longer have to base a lot of your financial business decisions on gut feel, because you'll have sound, informed financial advice at your fingertips at all times. So why would you do it? Why would you engage a virtual CFO rather than doing it yourself? Well, I'll touch on a few of those things. Time is one of them, because you simply don't have the time to do it all. The knowledge is obviously critical, having the expertise behind you. The financial management and the business decisions. There are different ways as to how you can work with a virtual CFO. Probably the most common is on an ongoing support and advisory basis, because that's really the true benefit you're going to get from them. But you can also work on a fee for service basis, a job by job basis. They can provide what might be considered standard services in terms of financial management and tax and accounting, or some specialised services outside of your traditional tax and accounting services that you might be using today. How do you choose the right virtual CFO? Well, obviously, you need to be looking at their qualification, their experience, their industry knowledge, the communication, analysis, strategy, risk, technology, and their passion. Making sure that they tick all those boxes is important, because this is someone that's going to be your trusted offsider, someone that's going to be there with you to help you support your business. So if they don't meet that criteria, then they're not likely to be the best person or team to support you. So you should be doing some research on them. You should be looking that they meet that criteria. Some of those things can be easily determined, qualifications, experience, etc. But other things, you'll need to meet them to understand whether they do meet all that criteria. So, interviewing them is something that you should do. They're no different to anyone else you would employ in your business. So really deep diving and getting a feel for that person and the team behind them, and making sure that there's someone that aligns with your values, your beliefs, and has the ability to be able to support you, because ultimately you want them to be with you along the journey right throughout and supporting you. So it is really critical that you do select the right person and team that can help you in that regard. So they're the 5 key pillars, if you like, to financial management. And if you can tick those 5 boxes, you are well and truly well on your way to being financially successful. Because not wanting to continue to harp on it, but the number one reason why businesses fail is got nothing to do with your ability to deliver your service or your product, but more about not financially managing your business well and ending up with some major cash flow problems and ultimately having to potentially shut the business down. And certainly, I'm very passionate about helping business owners, and I certainly don't want to see anyone, having to be in that position. And hopefully, you've got some value from my presentation today, and you go out and consider whether or not you've ticked those 5 boxes, or whether you've ticked certain aspects within them. If I can be of assistance in any way in the future, please feel free to get in touch. Rose, I think that's about it for me, unless anyone had any questions or you wanted to have a chat about anything specifically.
Look, that was absolutely amazing, Tony. Thank you. I want you to come back on the podcast and give that presentation.
Happy to do so, Rose, at any time.
Wonderful. Yeah, it's really it was so comprehensive. I can't believe it. I can believe it because you're very thorough, but it's what's involved in having a CFO, even if it's a virtual one. There is a lot more than just having a QuickBooks or a MyOb application on your laptop, isn't it?
Yeah, well, I think, to be fair, business owners, and I'm going to be as respectful as I possibly can, probably don't give enough weight to the financial management of their business. I mean, they're always, considering and concerned about the amount of money in the bank account and, how profitable they are and so forth. But they're probably not, paying enough attention to the holistic aspect. Some whine and complain about tax, and that's totally understandable. But really managing all aspects, because we're certainly not accountants and advisors that are just going to sit here and lodge your tax returns. Yeah, sure, we could do that, and that's certainly a small part of what we do. But that's really not going to help you much, because you could probably go to H&R Block if that's all you want. But really, having that financial support in your business is critical. And as I say, not many businesses can afford to, have a full-time one sitting in the office beside them, but certainly they can, most businesses can afford a virtual one. And sometimes if it's a small business, you start small and you grow along with it. But making sure that, you're considering, those 5 aspects and putting in place as much as you can to make sure that you're ticking those boxes is going to go a long way to help.
Yeah, I agree. I think we, as business owners, we don't take enough notice of our financial position. We look at our profit and loss, but we don't look at all the other things that are involved in having a financial partner, I guess.
Yeah.
Really.
Well, it's because we're busy. As business owners, we're all busy, and the main focus is to deliver the service or the product that you're delivering, and that's pretty much your sole focus. And then on top of that, of course, we're putting out hundreds of fires every day, because things pop up throughout the day, and we're busy tackling all of those issues, and we're all consumed in that. Sometimes the financial aspect sort of gets pushed aside a little, but that's where a lot of the problems end up. And if we're not keeping a close eye on it, that's when those small problems become big problems because they haven't been tackled early enough, they haven't been sorted out, fixed, and then as I say, that damning statistic ends up becoming reality.
Yeah, and tax compliance in Australia is one of the strictest countries in the Western world with tax compliance, and next to the United States, I think. But yeah, and so a financial partner can help you, with that compliance and steer you in the right direction so that you're not, uh, cheating, your staff members of their super, or underpaying their wages, or all those sorts of things. So there is a lot to consider as a small business owner. What you need to be responsible for, and finances is one of the big ones that as you quite rightly said, that we're all busy and we don't think about it, but it is one of the most important things. I mean, even a financial partner could help you with your financial plan. If you want to go to get a loan at the bank, they could help you draft one.
Yeah, absolutely. There's many aspects to it, and there's I mean, I tried to cram in as much as I could in our
You did
session
very well
today,
too, I
but
must say.
there's probably a bit more that we could have got into, but it's really about having the mindset that this is a very important part of your business, and a part that you probably don't have the skill and expertise in. And even if you did have some experience in, that you probably don't have the time, because your time is best spent focusing on, managing the business, delivering the service, making sure your customers, are looked after. So this part of the business is best, essentially outsourced, as I said earlier.
Absolutely,
Get the
Tony,
right financial
sorry,
partner for your business.
that's correct. Where can people find you, Tony, if they want to use your services, or just find out a bit more about what you offer?
Well, they can find me at our website, www.adpartners.com.au, or they can contact me directly at tonyd@adpartners.com.au, or contact us at the office on 03 9349 3499, and if they mention that they've come through here, Rose, they'll get a little gift on top of having a free financial assessment.
Hey, wonderful. Thank you so much. That's so generous.
No problem at all.
Wonderful. Thank you so much. So yeah, Tony, it has been a pleasure. Thank you. I will send an email and get you to come back on and give this very same presentation, because I think it's very well, it's full of information, and I think it's a worthwhile presentation to give business owners, especially now we're into the new financial year already. It's heading close to Christmas, and people really need to be starting to think about getting their finances in order for their business.
Absolutely. As I said, more than happy to Rose at any stage.
Lovely. Thanks so much, Tony, and I will talk to you very soon.
Terrific. And thank you very much for the opportunity today.
You're very welcome. It's my pleasure.
Bye for now.
Bye.